Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined this week by Nina Mishra to bring you two very top stocks. They're red hot. They just reported earnings already, so we already know how hot these two are. One is on the tech side and is an AI play, but it's not in chips. And the other is the one I'm going to talk about, and it's a cruise line. Yes, people are still cruising, and these are the stocks you might want to own, even if there's a bigger economic downturn. Cruise stocks have done well even in recessions. So let's take a look at the one I have for today. It is Carnival, ticker CCL. And I'm going to share some of the charts today, and we're going to take a look and see what the analysts are doing with these earnings estimates to give it a Zacks number one rank. We know they're raising them, but how much and how good is it? So you can see Carnival, it is the Zacks number one, as I said, because that's why it's a top stock. But look at this. It's got an A for VGM, and it's a rare number one stock that also apparently has some value. People are getting a little more nervous now about what is going to happen with these consumer focused stocks when or if we get a recession. So they're starting to sell off a little bit here, and you can see in Carnival right here, this little dip in the past month or so. It is down over 10% in that period, but maybe this is a buying opportunity because look at all these green arrows going back to 22. And this is when cruising has taken off. Once again, in this last quarter, they just reported with this earnings surprise of 8.3%. Carnival had record earnings again and on the revenue side, and it doesn't see that ending. It has had 8 consecutive quarters of record on its earnings reports. And so I'm liking what we're seeing. Now, we are towards the end of 2025 now. So 2026 is where everybody's booking their cruises, and they are doing so. So we're at about the same level of pre-bookings, early bookings for the next year as we saw a year ago at this time. But a year ago, these were at record levels. So we're right there at the good level. And they're starting to book for 2027, and they're still seeing strong demand for 2027 as well. So nobody is, turning away from cruises. Now, the good thing about a lot of these cruise companies, including Carnival, is that they have a variety of boats to meet various price points. So they do have the lower level Carnival line, which is one of their flagships, but they also have Seabourn, which is on the more luxury side. And then they've got everything in between, Holland America and Princess Cruises, which I'm pleased to report the Love Boat TV show was based on a princess boat, and it just passed an anniversary of its launch in 1977, just last week. So a lot going on with the cruises, and they're more popular than ever because they do give some value for the money. They are mostly all-inclusive, so you know what you're paying up front. There are some on-board things you can buy now, the spa, the more upscale restaurants, maybe a little bit of add-on even for Wi-Fi and certain other things. But you mostly know, and it is a good deal in many cases compared to just going the hotel and then getting food on your own route. So people still love it, and Carnival still bringing it. They have launched Celebration Key, which is their new stop, I guess you can say, their new feature in the Bahamas. And it's basically you get off and you go enjoy the beach and a bunch of restaurants included in your cruise. So that is taking off. And that's another amenity that the cruise lines are really focusing on, how to get these new ports basically that they control and that the customer wants. And they love those beach ports. So Carnival, as I said, looking pretty good. What do the earnings look like? The analysts must be raising here on yet another good quarter. And scrolling down, we can see that they are 6 raised for this year, this fiscal year in the last 30 days, and 6 more for next year. We have this lovely growth here, 49% on earnings for this year, another 12% on earnings for next year. Single digits on the sales side, but they have been increasing their yields on their margins. And some of that is because they are being less promotional. When there's all this demand, they don't have to mark down the cruises. People are willing to pay full price to book in that 2027 to make sure they get on the boat and the specific cruise that they want because demand is still strong. So that's why we're seeing the good earnings. And, we also have fuel prices that are lower now too, with crude prices lower. So that's another extra cost they don't have to worry about. So what is going on with the valuations on Carnival? So 13 times forward PE, PEG ratio just 0.6. Both of those are classic valuations. Any PE under 15 is considered cheap. A PEG ratio under 1 gives you both growth plus the value. So we're getting both here. It's had this nice pullback. Maybe people should put it on their watch list. If you're looking for a cheaper stock that still has momentum, but people are getting a little jittery, maybe it'll pull back a little bit more here. But I'm liking all the cruise lines, and Carnival is among the cheaper ones. So keep this one in your watch list. Zacks number 1 rank, strong buy. You got to love it here. And it's not AI. Ticker CLL again. And now I'm going to turn it over to Nina, who does have an AI play. And this one is surprisingly even cheaper than Carnival or just about any other AI play I have seen. So Nina, take it away.
Thanks, Tracy. I'm Neena Mishra, and my top stock pick today is Micron Technology, ticker symbol MU. Zacks rank number 1, strong buy rated stock. Let me share my screen and talk more about Micron. So Micron is jumping today. It's up, as we are recording this, it's up about 4.8%. And that's mainly because all the chip stocks, they are rebounding strongly today after Friday's sell-off because of easing of trade tensions between India and China after President Trump's comments, and also because Micron got a big price target boost today. And talking about what this company does, so it's a leading global provider of semiconductor memory solution, and the stock has been a major beneficiary of the AI boom. It is one of the biggest winners. In particular, its high bandwidth memory, HBM, that is essential for AI chips, which are used in the AI models. And today, as I was alluding to, BNP Paribas analyst raised his price target by 170% to $270, and he believes that the company, or we are in the early stages of a memory super cycle, and investors should remember that memory usually is a cyclical industry. Now, talking about the results, late last month, they reported their fiscal fourth quarter 2025 results, and results were excellent. Earnings were up 157 year over year, and revenues were up 46% year over year. Even the guidance was excellent, but that upbeat guidance did not meet street very lofty expectations because the stock has been doing very well. We'll come back to that. And now let's go back to the quote page and take a look at the detailed estimates. So after those excellent results, you will see that analysts have been raising their estimates for the current quarter and current year. So that is why you will see that all these estimates have gone up, and that is the main reason why the stock is now a Zacks rank number one strong buy rated stock. And you will see that the industry rank is in the top 4%, sector rank is in the top 6%, and even the scores look very good. B for value, A for growth, and C for momentum. Momentum is not that good, but a VGM score of A. And I was talking about the surprise, better than expected results. Looking at the longer term, yeah, the company has missed twice two red arrows in this 5 year time horizon, and on all other occasions, it was able to beat estimates. Now, the stock, as I mentioned, has been a big beneficiary of AI boom. In fact, it is more than doubled this year. It's up about 125% year to date, and that makes it the top performing chip stock this year in 2025. And it is the only US based memory manufacturer, so that mm, the company benefits from the trade tensions. It is not usually hurt a lot by the trade tensions. And after reporting its earnings, CEO Sanjay Mehrotra said that the supply is tight. And he added, "We expect a healthy demand supply environment in 2026 for the overall DRAM, and that bodes well for profitability." So things look quite good for this stock. And looking at the multiple, it doesn't look quite expensive. It is trading at a forward P multiple of 10.95 times, and that is why it is P for value, not too bad. But memory stocks generally trade at a discount to the broader chip sector. That is something investors should remember. Now, looking at this chart, price consensus and EPS price chart, you will see that the stock has been quite volatile. As I mentioned, the shares fell on Friday along with the broader chip sector, and they had uh, fallen even after reporting excellent results. So there are plenty of opportunities with this stock to buy on dips. So investors should be looking to buy on pullbacks, and its role in the entire AI ecosystem, as well as the demand forecast, that makes it worth a look along with the excellent Zacks rank. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything. And we will see you next week with two more interesting top stock picks.